Yeah, we're in. Are you guys in? I see Raina here.
Hey, Leanna, how are you?
Hey, Miss Raina, how are you?
Good, good. Now you should be able to share your screen if you have any sort of presentation or anything.
Gotcha. Okay. Yeah, I'll jump off. Right.
Hi, Deb. Jen, welcome.
Hi.
Thanks for joining us. Sorry for the technical difficulties.
Oh, I'm good. Hi, Leanna.
Hi, sweet lady. Mr. Ryan. Let's give it a few more seconds. I know
There
we,
you are.
how are you? Are you guys all working from home today?
Yeah. Yep.
Probably safe to go ahead and start, Ryan.
Yeah, just give it a
Yeah, we may have a few that are still jumping on. We've got, yeah, we've plastered it everywhere, but there's a lot of things happening. And it'll be good just to record it too, because we'd always put it out in our business pages as a.
perfect. All right, all squared away now.
Just let me do the number. Eight, 885 283 525 79. All righty.
Oh, well, about 2 more minutes and then we'll get going. Let those stragglers get on there.
Are you going to record it, Ryan, or do you want me to? Or
I believe Raina is recording it.
well, and then I put the links there in the chat.
Yeah, we're recording.
Awesome, thank you.
Mr. Andre, let me give you a call back here about, yep, probably about an hour. Awesome. Thanks. All right, bye.
Start. All righty. Yeah, go ahead, Ryan. We can just start if you want.
Get it going here.
Perfect.
All right. Well, I want to thank everybody for taking a couple minutes out of your afternoon here to sit down with Leanna Mason of Symmetry Financial Group. She's going to be discussing, a couple different topics within the financial realm, life settlements, debt-free life planning, that sort of deal. And we're blessed to be able to have this opportunity because normally in the Saturn barter world, we talk, a lot of barter and utilizing your trade, and our membership has a lot of different memberships or members that belong to the membership. And so there's much more out there within the scope of what Saturn can bring to our membership. And so someone like Leanna, who's been with us since 2009, she was one of the first 100 members to join Saturn Barter. And she's kind of a Swiss Army knife out there. She just kind of does a whole bunch within the Saturn world, but then outside of Saturn as well, things like Symmetry Financial Group come to play where this would benefit the membership on a whole nother level. So Leanna, you have the floor here. Please enlighten us all and show us how to save some money, make our money.
Make it work for you, yes, for sure. So this is my daughter, Audrey. She's been with Symmetry about 3 years now.
Almost 3 years.
And I've been about 2.5. So she got in just right after her dad did, actually. She's been about 4 years ago now. So yeah, so she's definitely got the jump on me and learning all the processes, but she's very knowledgeable. So we'll go through some of those basic things that Ryan had mentioned. I'll do a quick screen share to just kind of answer. We need to get a screen share.
Permissions, yeah.
Anyway, of some basic things that we'll cover today. If I'll just bring it up here, but the first question would you be able to pay the mortgage payment if you had a chronic or a critical injury or an illness and you couldn't go to work? What would that look like for you? So we're going to answer that question, how we can help with that. And then also the second thing is called life settlement. Do you own a life insurance policy that you no longer want or need? That's our life settlement program and how it works. And then our third question we'll answer today is, what if we could show you how to be debt-free, including your mortgage, in 9 years or less without spending any additional money and improve your cash flow? So that's kind of what we're going to talk about today and the things that we offer through Symmetry Financial Group. So just a quick overview of us. We have an office here in Lakewood. We've been here since March 1st. We opened up right before the whole COVID craziness. We're members of the Saturn Barter community with our DJ business. We've DJ'd and done music and parties and weddings and tons of karaoke, and we have a 9-hole mini golf and carnival games and concessions for the last 20 years or so, since about 2000. Kids have all grown up. We've had our own business. It's just been a good thing for us to do as a family. And in joining Saturn, we've done many, many events, but we just kind of really wanted something that we could do long term. I'm just hit 50 a few years back and don't want to throw speakers forever and haul equipment and set up for events. It's definitely fun, and we love doing event planning. But this has been something that we've been able to do even as a family, but it's more long-term, it's residual income. We're building an agency, we're building teams all over the country. And now with this whole telesales, we've been able to make that switch and do everything digital. So we don't have to be in a specific area anymore. Wherever we have a license in that state, we're able to do business there, help families across the country now. It's been great for our military families. Audrey's will tell a little bit about herself here in a minute, but she was in the military, so a lot of spouses that are home. We've got new agents coming on that are going to be able to do it, from anywhere. So we're blessed to be able to have that, and also a physical location here, right in Lakewood, behind H&L Produce. So we are seeing families here in the office now. We are working with small businesses. Is going to be a big focus. That was going to be a big focus with our Tacoma Pierce County Chamber. Before the whole COVID thing happened, we had many events scheduled at Ribbon County, Lunch and Learn. We had a UP Wake Up scheduled to do it here. So we're hoping to still get back into that at some point and be able to really connect with businesses, families to help with that. So that's kind of where we're at this point. I want to introduce my daughter, Audrey, and she can go from here.
Okay, perfect. Thank you. Okay. Hold on a minute.
Why don't you just
Okay,
unmute?
sorry about that, guys.
Cool.
Can everyone hear me now? Okay, perfect. So like Leanna said, my name is Audrey Bobinger. Prior to joining Symmetry Financial Group, I actually was in the Navy for about 6 years. Getting out of the military, I still had no idea what I wanted to do with my life. My job in the Navy was basically a sub hunter, and you can't really hunt submarines in the private sector. So my dad found Symmetry in July of 2016, and he kind of just showed me the business, and I thought that it would be a great opportunity to learn something new, and really it's been a blessing for my family since being in Symmetry. So what we're going to talk about first is answering that first question. A lot of what Symmetry does is what's called mortgage protection life insurance, as well as critical period or final expense programs. And we basically just help families protect the things that they love most. We help them to protect their homes, their loved ones, make sure that they're not leaving their families with a big burden of debt once they pass away, because most families rely heavily on both incomes from, husband and wife, or, if they've got the single family, single parent, want to make sure they take care of their children. So we're able to customize programs specific to each of our clients' needs. We're able to work with over 35 A-rated insurance carriers like Mutual of Omaha, Transamerica, Foresters, National Life Group. I mean, the list goes on, but we're able to, take the brunt of the work off of the consumer. We're able to shop around to all those carriers to find the best programs for them that fit comfortably within their budget. And then we actually walk them through the application process directly with those carriers. We're able to, help them to figure out if they want to do a full mortgage payoff, partial payoff. We have a program called Mortgage Payment Protection that we do with our senior families who maybe are on fixed incomes and can't quite afford to pay off the entire mortgage, but they just want to buy themselves some time, buy their family some time to, make those big financial decisions without feeling rushed to sell their home because they can't afford the mortgage payment. So a variety of different resources that we have for families who have homes, want to protect that asset that maybe they've owned for 30, 40 years and want to leave as a legacy to their children, grandchildren, whatever the case may be. So it's a pretty good program, and we really enjoy, that's one of our biggest niches. And do you want me to go ahead and just talk about the living benefits? Or?
Yeah, go ahead.
Okay. So what makes mortgage protection different than just traditional traditional life insurance? Really, the life insurance should just be called death protection because it only protects families in case of death. It doesn't actually protect them while they're still alive, while they're still working. Can you pull that living benefit sheet there? So what's cool about the mortgage protection is that it gives families access to the money that they would receive in death while they're still alive in case of a terminal illness, chronic illness, critical illness, sometimes even critical injury. And so that's what makes it a little bit different than just traditional life insurance, which is just death protection. And the reason why this all came about was back in 2008, 2009, when the stock market crashed. Obviously a lot of families were losing their homes, and the mortgage companies actually got out of offering traditional mortgage protection insurance, and the life insurance companies, saw that there was a need to protect against disability because disability actually is the #1 cause of foreclosure in the US, with #2 being death. So now we can protect against the #1, #2 causes for foreclosure by giving families access to the money to help pay for, getting some of these big leading causes of death. Heart disease, cancer, accidents are a big one, stroke, heart attack, cancer. Those are the big 4. And so if they have one of those triggering illnesses, then they can access the death benefit essentially while they're still alive in order to help them make those mortgage payments so they don't lose their home, go into foreclosure, have to change their standard of living as they're battling cancer or as they have just had a heart attack and now they can no longer work. So that was a big need in the market, and the carriers saw that. And so, again, these programs kind of came around about 5 to 8 years ago and have been really successful. I mean, I've had 2 death claims now. I've had 2 people, out of my couple hundred that have used their accelerated benefits. And, hopefully our families never need these things, but if they do, they're there for them as a resource. It's already built into the program. It comes at no additional cost. And so that's something that we really pride ourselves is giving those families the tools that they need just in case, worst case scenario, something happens. So, and then just kind of a little touch on the difference between the chronic illness and the critical illness. A critical illness, heart attack, stroke, cancer, end-stage renal failure, there's a couple different ailments that certain carriers classify versus others. But the big one is that chronic illness. If you have some sort of injury or illness, you have a critical illness and it becomes chronic, then that is kind of given to the families as a monthly income replacement, really up until they can go back to work or until they pass on. So, great resource to have, a little bit different than the traditional death protection insurance. Mortgage protection offers living benefits as well as that death benefit. So anything else you wanted to add on that, or good to go there? Okay. Anyone have any questions so far? Going too fast for anybody? Okay, great. Oh yeah, and then just a couple, statistics on why these living benefits are so crucial. 70% of the population will suffer critical or chronic illness, such as heart attack, stroke, or cancer. They may live, but again, being financially crippled in the process because now they can no longer work, out of the job. A big one that we hear from a lot of families is, oh, I've got life insurance through my employer. Well, that's great, but that employer won't pay, your monthly bills. They won't pay that death benefit if you leave that company, if you get laid off. So that's why it's so crucial to have something outside of work that you can control, that has those living benefits, that can replace your income.
There's no such thing as job security. Yeah.
Right, exactly. Especially nowadays, with what's going on. A lot of people have been laid off. Unemployment, has taken months to kick in for some people. So if they were, a lot of the carriers are adding coronavirus to their critical illness rider. So if someone had coronavirus, now they could access their death benefit. So a lot of really cool benefits and things that they can access money if they need it. 6 million Americans suffer from heart attacks. but there's a good chance of survival. It's just how are you going to live on after you have those major illnesses. So these programs protect against that, which will also protect your family and your loved ones. So I think that's all for the mortgage protection final expense programs. So that hopefully answered the number one question. So we'll go ahead and take that off. And then did you want to talk a little bit about the living or the life settlements?
Yeah, so the next piece of that question,
Oh, there you go.
let's see if I share this other one here. So again, back to that important piece of what would you do? What is your backup plan? I mean, think for yourself. What would you do? I mean, we ask this every day to our families. I mean, it's kind of scary to talk about, and we're like, no one likes talking about death and dismemberment and heart attacks, but to have a backup plan. We help a lot of families with their will, to get that in place to make sure that they leave their assets to their loved ones, so it doesn't have to go through probate and go through all the courts, and it costs them a ton of money to find the next of kin if it's not in your will. So that's what we do every day, is just to help families have that backup plan. What is that? Ask that question to yourself, to your family, to your loved ones, if you don't have something already in place, just to find out what is available. So do you own life insurance policy that you no longer want or need? We joint ventured with a company a year or so ago called Life Settlements Incorporated, and they're taking that old life insurance that we just talked about that has no death benefit, no terminal illness. They're taking that death benefit policy and are able to convert it into cash for families to use in those times of need. If they've had a serious medical ailment, that they're in a nursing home care, they're in long-term care, they're in a home facility or other kind of facility, that they don't have treatment, money for the treatment, cancer treatment centers, just seniors that are going into senior homes. They're able to, make an offer on those policies. We have 14 or 15 different investors that are able to look through that policy, find out what it's worth, how everyone has to do just a quick blood and urine, so they do know medically what the customer is experiencing, and they're able to make a bid on that and offer 40, 50, 60, 70, 80, even 80%. I had a customer a few months back that had just done a life settlement, accepted that offer, and it was 80% on the dollar. He had $100,000. He got $80,000 check. He's not real healthy. They're downsizing, selling their home. They're moving closer to a facility. But he was able to get that money in hand and use it so that it doesn't just expire. It was expiring in 2 years. So that's something that we all added to our arsenal of tools that we can help families with, is sell those old policies, make that money usable. Because that was the bad thing with term back in the day, is everybody hated term because they knew that they would probably not die within that 10, 20, 30 years. And that policy was useless. It spent all that premium money, and then it just expired. So all of our policies now, and the carriers that we work with, as Audrey mentioned, they're all top 1 A-run rated carriers. We have 30 plus different carriers. Foresters, AIG, Mutual of Omaha, Gerber, National Life Group, Athene, Assurity, Fidelity and Guarantee. We do all those advanced markets. We do IULs to help our young families and young kids save for the future and be covered for life. We do annuities, so they have those big chunks of money. So if they need to roll that from a 401 or they get an IRA, or they're able to get a settlement somewhere, they need to put that money somewhere that they can use to retire on. They don't want to just put it in a savings account that's making 0 interest, or in a 401 that's going to be susceptible to the market. Those are all scary places to put it. We have plans that are guaranteed, that are secure, that are no risk plans, that they're able to get 6, 8, 10, 12% interest, that they're able to use that money down the road. So these are all markets that we're able to help families with, to be able to have a better plan than a lot of those government plans that are available and that are out there. So so the life settlement piece, I put our link there in the chat. But again, it's a digital e-application. We send it in to Life Settlement. They come back after that medical is done with an offer, and we're able to help families have that income.
And it's no cost, no obligation from the start to finish. It doesn't cost the families anything. It's a free resource, for those who are suffering from, cancer or other life-threatening illnesses. It's a free review. We volunteer our time to, again, do all that work to get that assessment. And then, again, it usually takes a little bit of time, but we do, have several different investors that'll come back with a cash settlement, essentially, to just buy that policy from the owner. And it really has helped a lot of families, especially, young people. I heard of a case where a woman was 27 years old. She was diagnosed with breast cancer. It was like stage 3 or stage 4, and she was able to get $270,000 out of her $300,000 term, just straight up death insurance policy. And that really changed her life, forever, to fight cancer. So, it's a really good resource for a lot of different folks. It doesn't necessarily have to just be older people, anyone that just, has a policy that they want to liquidate. That's basically what the life settlement insurance program does. So. Did you want me to move on to life settlements? Or debt for life? Or?
Yeah, so talk a little bit about it and then I'll jump in.
Okay, great. So the number 33 question, is what if we could show you how to be completely debt-free, including your mortgage, in roughly 9 years or so, without you spending anything additional than what you're already spending? That may sound too good to be true, but I promise you it's not. We're able to achieve this program with a whole life insurance program. Through 3 different carriers that we have, Mutual Trust Life, Lafayette Life, and Foresters Financial. And basically what we do is we help families to reevaluate their spending, see where you are spending money inefficiently, how we can redirect those funds in order to invest them into this whole life insurance program that's guaranteed a 4% minimum interest rate plus dividends. And dividends are, anything outside of what the company invests, they pour back into every policy holder. And, then you're basically able to take your cash, invest it in the program, get that interest, and then pay off your debt using the carrier's money and that cash value that's accumulated very quickly. The 4% interest compounds daily. And, use that money that's secured to pay off your debt, pay off your credit card, car, student loans, your mortgage, while also improving your cash flow because you are, systematically paying off your debt, taking that payment that you would have paid on your car, but now it's paid off. You're investing it back into your whole life insurance program. And then, again, using the carrier's money, they use your fund as collateral. They take their money, they lend it to you to pay off those debts. And, it's been amazing. I personally have it for my family. I know I've helped, 6, 7 families. Leanna's helped, 10, 15 different families. And no other IMO or insurance company out there has access to this program. The company that started it is called Your Family Bank. They're based out of St. Augustine, Florida, and they've been around for about 10 years. And they have a few little small partnerships with a couple of other insurance companies, but mostly on the East Coast. So that's why when Symmetry Financial Group partnered with Your Family Bank, it really was a big game changer for us in the financial world, just to see the way that this technology works. We give families a very well laid out systematic plan to pay off their debts. We evaluate their spending, and we're able to get them out of debt in half the time, including their mortgage, which is pretty crazy. Because a lot of things that you don't consider when you're looking at your debt is how much money you pay in interest. And so the big thing for this program is we want to get some of that interest money back into your pocket by helping you to pay off your debt faster. Did you want to run through this real quick?
Yeah, so this is just a sample of what's called a debt management analysis. It's the big picture summary, as it says here, YFB, the big picture of how that actually works. So this is a sample of someone that had a 20-year mortgage. They had $151,000 of scheduled interest. And so what they do is you just keep making that monthly payment. And as we suggest, we try to find what's called inefficient dollars from money that they would be spending on things that they may not need, things that they could cut back on because they see their future retirement is more important than maybe say that yoga class. I think Audrey had one of her clients. She's like, you know what? I'm canceling my yoga. I found some more money. I've got to put this into my plan. And, you know, whether it's overpayments on their credit cards now, I mean, everybody wants to pay off their debt faster, and that's a good thing, but we have a better way to do it. Put that money into this fund, let it grow, make the minimum payments for now. You may pay a little bit more in interest right now, but you'll be able to pay off that a lot faster if you don't make those overpayments. Money that you're putting into savings. A lot of families we come in contact with, they already have $10, $20, $30,000 in their savings account. It's not making them any money. And just we have a better place to put it. I was at Bank of America the other day, before the COVID, a few months back, and this older gentleman, he wanted $3,000 in $100 bills at Bank of America, and they didn't have it. He was fit to be tied. They were calling around trying to find money, trying to order money, but even $3,000, you don't have access to that money at the banks. You know, maybe some of the other banks may keep some of that stash on hand, but they just don't have to by law. I mean, I think it's 5% on the bigger banks and 8% on the smaller ones, if that. They don't even have to keep that cash liquid in the bank. So yes, a better place that you have access to that money. So redirect all those inefficient dollars back into your fund. Like Audrey said, this is what's called infinite banking. I mean, before only people that had, you know, $100,000 or more could to put their money into a plan like this. Now the average Americans like us can put our monies into a plan, start with a small amount, redirect those dollars, build that bank on yourself. You know, Susie Orman, Dave Ramsey, a lot of people talk about, you know, a financial plan and eating beans and rice and putting money into envelopes and you know, divvying out money that way. They don't have a plan. They don't have a program. We do. We have a roadmap. We have a program. It's an insurance product that we're able to help families do this by redirecting those dollars. So pay off your debts as your fund grows. As I tell a lot of families, it's like having that secured loan at the bank. When you were in college and you wanted a credit card, they're like, nope, we don't trust you. You're just a young kid, started out your first job. But if you give us $500 in collateral to put on as a secured loan at the bank, they'll hand you a credit card so you can start building your credit. Same type of thing. As you're putting money, redirecting part of that premium each month, you're buying a whole life plan, you're buying insurance with all those living benefits included. And a part of that premium each month goes into this fund, usually about 2/3 to 3/4 of that premium of what you have extra each month goes into this fund. And it's your fund, it's your savings, it's your money. But as that grows, you can borrow up to 95% of what's in this secured fund at the bank for paying off debt. Use the carrier's money, as Audrey said. These carriers have, National Life Group alone has $3.2 billion in assets. They have to keep 5 times the amount of every policyholder money in a fund that they could pay off. That's how they get their A1 ratings. That's how they get that accreditation with those high credit. So they know they won't go out of business. A lot of those smaller insurance companies, they go out of business. They don't have the money. They don't have those funds backed up to secure those ratings. So those are the only carriers we work with. I mean, Forrester's $21 billion, Mutual of Omaha, they've got $8 billion in assets. They have money. So let them give you that money for next to nothing interest to pay off those loans. So you're not using your money. You're making your money work for you twice. You've got money in your fund. You're borrowing the carrier's money, paying off that debt while your fund continues to grow. So just an amazing concept that no one else has. So pay off those debts with the policies, redirect that same amount. Like I've already paid off 2 credit cards. One was $50 a month, one was $75 a month. Now that $125, I'm just rolling that back into the fund. So not only are they taking my monthly was $400, I upped it to $600, now I've upped it to $800. Now they're taking that $125 to pay back that loan. So that's how it works. It's just a way you can literally use that to create your family bank that you can use for big purchases down the road. You can use it to help your kid buy their first car. finance your kids' college education, help them with their wedding plans, buy their first home. You're not having to go to a bank to borrow that money at 6, 8, 10, 12% interest, 3, 4, 5, whatever it is. You now have that bank that your family can use for those purchases. Doesn't have to be medically related. It's your bank. You can use it for whatever purposes you need it. So again, on this example, we've gone from 20 years in debt, $151,000, to 8 years debt-free. They've saved $3,000. And in that same 30 years, they've now had $1.7 billion in that fund. 1.7 million, sorry.
Billion, I wish.
That'd be good.
Million.
Liquidity in that fund, and then with their death benefit, 1.9 million. So that's the value of what these plans can do. So definitely research it. You know, I was going to put our link on there to do a quick review. I mean, we do a free review to families all day, every day on what they have in place. And again, you know, as Audrey mentioned, we are field underwriters. We're insurance agents. We aren't licensed to lose your money. You know, a lot of the Edward Jones and financial planners, they have their Series 6 license. They are licensed to invest your money in the market, in the stocks and bonds. They can lose your money. We can't. Ours are all guaranteed products. They're insurance products. So there's no risk. You're getting those living benefits. You're getting that cash value. You're getting a death benefit. So there's, you know, no risk involved in the programs that we offer. So, you know, if there's people that want to invest in the market, they like doing that. They like watching their stocks, and they don't mind those crashes in the market. 2008, when the market crashed, you know, in these last few months, the market's crashed. They don't mind doing that. But to me, it's not something that I want to have that responsibility for other people's money and losing, you know, tons of years of hard-earned cash that they put into it. So, so that's the difference in what we do. So definitely check around, learn what programs are out there, what's available to you.
Come see us.
Yeah, and definitely come see us. We have our Facebook page listed there. You can give us a call on that. You can come into our office anytime. As I mentioned, 7304 Lakewood Drive West, right here in off of Lakewood Drive on 72nd, right behind H&L Produce. Phone number, we've got our Facebook page. We've just started our LinkedIn accounts, and we'd love to go over that with you and do that free review. So anything else, Ms.
No.
Audrey?
Nope, I think that's it. Anybody have any questions or thoughts, feedback?
I did have a question. I don't know if it's a silly question, so I'm going to say it anyway.
No, there's no such thing as a silly question. Go ahead.
So when it comes to, you know, life insurance, you know, you guys were mentioning that hopefully, you know, you don't have to use your, you know, your life insurance that you've been
Your living benefits.
Yeah. So what happens in that case of, you know, someone lives a long, healthy life and they don't necessarily need to use the living benefits, as it were. But sorry, I guess my question is twofold. I've been hearing about a product that is very similar where you can put money away in your life insurance, but you can also use it as an investment tool of sort. Yep. And I think that's kind of what you were talking about with being able to buy your car, or
yeah.
What are the stipulations on something like that, as far as, you know, do you not get access to the investment side of it if you're only putting in X amount, or could you?
Yeah. So let me elaborate on that. So there are a couple different whole life insurance programs. Do you understand the difference between term and whole life, or do you know the difference?
Yeah.
Okay. So yeah. So term, you know, it expires, it accumulates zero cash value. You're able to get a lot of insurance for a very little amount of money. You know, but when that program expires, if you haven't used those living benefits and you haven't passed away, then you could choose to do one of two things: either let it lapse, meaning that you no longer have that coverage, or you can convert it to a whole life insurance program. And whole life never expires. Every whole life program accumulates, you know, depending, there's like a scale of a little bit of cash value, a lot more cash value, or a ton of cash value. So if you use a whole life program as an investment tool, the best programs to do are either an IUL, which is an Indexed Universal Life program, or you can do the Debt-Free Life program. So this is, again, a great graphic that Leanna put together as far as, kind of the cash value and how that accumulates. But the IUL is a great place to start, especially, for young kids. Like, I have 2 IULs on my 4-year-old and my 7-month-old that I'm just kind of stashing money away for them. And there really isn't much stipulation as far as, when you can pull the money out or how often you can. The best practices are to not touch it for at least a year, because you want to kind of get the program running. Because what IULs do, or indexed funds do, is they track the indexed funds of the market without being directly invested in the market. The carriers guarantee your programs, and they offer you what's called a floor, meaning that if the stock market takes a dip below 0, the carriers are going to guarantee you at least 0.25% interest. So you're not going to lose money in the market. You may not gain anything that year, but unlike with traditional, retirement savings or investments like 401ks or traditional IRAs, if the stock market tanks, so does your investment. So, that's kind of the difference as far as, having something that's protected, it's guaranteed, the insurance carrier is backing your money, and you can access that fund, almost immediately. It's not quite as liquid as a bank account. You can't just go to the bank with an ATM card and pull money out of your account. Most often it's just a simple 1-page form. You can't take out more cash value that's obviously in your program. They use your cash value as collateral, but they do loan you from their money. That way your money still continues to sit in your fund and accumulate cash value on a larger, sum of money, rather than, taking money out constantly. But what's great is that you don't have to pay that money back. It's your money. If you do have a loan, a policy loan out against your cash value, and you pass away, all the carrier does is just take that loan amount and take it out of your death benefit. So again, you really don't have to worry about paying that loan back. It's your money. You get to use it how you want. And then again, if you have any outstanding loans that you can choose to or not choose to pay back, it'll just simply come out of the death benefit. Does that answer your question?
No, that's perfect. Yeah, and I mean, at the end of the day, with what we do at Saturn Barter, we work with a lot of business owners. And so something in that realm of, we're always talking about cash flow or how to make your money work for you. And this is another one of those products / tools that I find that, probably people just aren't aware of it. And
Right.
I heard about it a few years ago, but, it's not something that I was able to conceptualize and kind of figure out how to get in. But young people out there and business owners, this seems like a tool that definitely should be utilized more.
Absolutely. And it works a little bit differently for business owners because, not only do you have your personal debt, but business owners also have their business debt, right?
Right.
This works really great for small businesses that own have a lot of equipment or need to buy a lot of equipment, or, have a lot of assets that they want to protect. Like I've worked with a plumbing company, construction company, like pest control company, because, you have to buy stuff, right? You have to have a fleet of trucks. You have to have, plumbing equipment. You have to have construction tools, so rather than going to the bank and requesting those funds, paying a loan back at, 7, 8, 18% personal loan, business loan, they are able to use the Debt-Free Life program to, take any overhead costs out of the business pool, and they can use their Debt-Free Life program to, buy those purchases that normally they would have to go to the bank for. They can use their own cash, and then any extra profits they can just dump right back into their fund, allow that fund to grow, build up that cash value again. And then if they need to buy another, $40,000 truck or another $10,000 piece of equipment, they just borrow from their fund, and they never have to pay it back.
Right.
Yeah, it's really great for small businesses as well.
Fantastic.
Yeah. And then this thing that Leanna was pulling
Hold up, go ahead, Jen.
Yeah, she was just kind of showing you again what I was saying as far as the IULs, the protected floor, really protecting against the market. You'll see here the mutual funds, 401ks, IRAs. The most often indexed fund that we do that comparison to is the S&P 500. If you know anything about the stock market, it's the most consistently increasing indexed fund in the history of all time. And so again, when the stock market crashed in 2008, stocks went down 38%. Mutual funds and IRAs all lost a ton of money. People lost everything, their homes, all that. If you look at the IUL, you're in the green section here, they made 0.75%. So they were up in an economy that was down 38%, So again, just giving you that floor, that guaranteed protection. Your money's not going anywhere. And it really kind of just depends on your age in life, where you're at as far as your consistency and your availability, your thresholds
risk
for
you wanna
risk,
take,
right?
yeah.
What's your threshold for risk? Are you conservative, moderately aggressive, or aggressive in your investments? So,
Or do you want something that's, risk-free?
Definitely. It's
Awesome.
always good to hear it, and like I said, I heard about something similar a few years ago, and it's just always good to get tapped back in, especially
Yeah.
from a client, and hear exactly how it works and how it could benefit. So
yeah. And this is the debt-free life concept, or the bank on yourself, infinite banking. That's really what hedge fund managers do.
right,
They take that from the very, 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 very wealthy, and we're just bringing it down to the kitchen table for the average consumer. So it's
Middle-class Americans.
right, hardworking Americans that deserve to reap the benefits of compounding interest.
right, yeah.
So
Oh, well, it's fantastic. Appreciate it. Let's see. Do we have any other questions here? I'm trying to see. This is
Yeah,
on-
just
Oh,
both of
Oh,
our
there you go.
websites
There we
are
go.
there.
sorry. Can you repeat
you know,
that, Anna? We can hear you.
hi.
Yeah, sorry. Just on the chat, there is our links to our life settlements, our Facebook page. There's definitely, it's available if you want to do my website or Audrey's, are both there. And there's just lots of ways that we can kind of just do that quick free review. So see what you've got in place. A lot of families, when we meet with them, we go in home and they're like, yeah, I've got this, this, and this. They pull out their policies and it's not what they said. I mean, a Hawaiian lady I met with about a month or so ago, she's told me about her husband. They thought they had $500,000 in coverage. Her husband passed away a few years ago. They pulled out the policy and it was an accidental only, and he died of a heart attack. And they were devastated. They had no idea that's what it was, and they just remember the agent saying, "Yeah, you've got 500,000," but it wasn't for those natural causes. If it's too good to be true and it's cheap, do your research. Make sure, have someone do that review,
Right.
and
right.
find out what it is. Does it cover those natural causes? Is it just a death benefit? Does it have those living benefits in place? All that's something that we can do free of charge. So.
Fantastic. All right. Well, appreciate the minutes here during a busy, beautiful Tuesday afternoon, but it's
Yes, it is.
definitely worth it to to kind of know moving forward. We have a great resource here just within our own little Saturn Barter group, and definitely something we should all take advantage of. So
Yeah.
thank
Awesome.
you both again.
Thank you, Ryan.
Yep.
And yeah, you said the easiest way to get a hold of you, find you, you posted it in the
Yeah, here's our
That-
office number 253 4 yeah, that's our landline here at the office, too, and then our cell phones.
right.
Yep. Or you can just go to our website and or our Facebook page. We've got our contact information there as well. So thank you guys for the time. Thanks for having us. It was a pleasure.
All righty.
Ryan.
Appreciate it. Thank you.
Take care.
Alrighty. Bye-bye.
Bye.